So let's start with VAT. Now, VAT is one area which students, they don't like to learn because they're like, it's not important or it's theory or I can manage the exam without it. But to be very honest, a lot of easy marks can be scored from this chapter. So let's go right away into what are some of the important areas in this particular chapter. Now let's take a look at all the important areas. So I'm just going to classify the whole chapter into the areas. So first thing is a general idea of how VAT works. So working of VAT, working of VAT. We need to have a general idea of how VAT works. Yeah. Then a lot of things about registration, a lot of, registration things. We're going to learn a lot about VAT registration. Then we're going to look into a lot of some details about pre-registration input VAT. Yeah. Pre-registration input VAT. All right. And then we are going to look into some general rules with regards to output VAT and input VAT. So output VAT, like calculation of output VAT and input VAT, some important points. Okay, some important points with regards to that. All right. Then there is something called as the tax point. Okay, there is something called the tax point. We're going to learn about that as well. Then there are some theory areas which are quite important. So some theory areas, some VAT theory areas. Yeah. Then there are the accounting schemes. So VAT schemes, the various kinds of VAT schemes. We are also going to look at imports, how VAT gets affected when it comes to imports, exports, acquisitions, dispatches. Now this is within and outside EU. All right, EU, European Union. These are some quite important areas. Let's discuss all of this one by one. So we'll just take an idea. We'll just take a look at how VAT works. So if you remember, it's like a person sells goods. Yeah, when a person sells goods, so for making those goods, the person would have bought some materials. Yes, a businessman would have bought some materials. And the VAT he pays for that is input VAT because he's going to claim that from HMRC. Now, the VAT that the customers are going to pay, our customers are going to pay, that is the output VAT. All right, that's the output VAT, input VAT. And what the rates, it's 20%. VAT rates at 20%. If it's exclusive, you do 20%. If it's inclusive, you do 20 by 120. Always remember to take a look at the question whether it's inclusive or exclusive. And is VAT a direct tax or an indirect tax? It's an indirect tax. In fact, it's the only indirect tax about which you're learning in the paper tax. Now, VAT payable versus VAT recoverable. What's the difference? VAT payable is when your output VAT is greater than your input VAT. VAT recoverable is when your input VAT is greater than your output VAT. And hope you know there are two types of supplies. There are taxable supplies and exempt supplies. Yes, when VAT is concerned, there are VAT taxable supplies. Yeah, there are taxable supplies. And also there are exempt supplies. Okay, taxable supplies and exempt supplies, which means VAT taxable supplies means those supplies for which VAT is we can charge it. Now there are again two types: standard rated goods. Okay, standard rated goods, and the next one is zero rated goods. Okay, they are zero rated goods. Zero rated goods. So the difference here, standard rated goods is like you can charge output and input VAT. Output VAT we can charge at 20, input VAT we can claim at 20. Zero rated goods means those goods which are actually 0% tax, but still they are called VAT taxable supplies. VAT exempt supplies, we can't claim input VAT. We can't charge output VAT as well. Now have a look at the zero rated and exempt supplies. You can go to your textbook, page number 367 with regards to, what are the exempt and zero rated supplies. Go through that. Then coming to the registration test, that is what registration test? How do you know whether or not you have to register for VAT? There are two compulsory tests, which are, so the two compulsory tests, they are historic turnover. Yeah, there's a historic turnover test. Historic turnover test, and there is the future ties test. Future ties test. Historic turnover test, futures ties test. Now, how do you know which one to use? Historic turnover test, you're checking your previous 12 months, so 12 months in total, or starting from your, so 12 months in total. Every 12 months you're having a look. Yeah, every 12 months you're taking a look if it exceeds a particular limit. Yeah, and what is the limit? It is 85,000. So that is when you use historic turnover test. And future ties test is when you feel today that the coming 30 days, your taxable supplies will exceed 85,000. There are 2 days with regards to each of these tests you need to know, which is when should you notify HMRC and by when is the registration effective. So let's take a look at that. And so with this is the notification date and the registration effective from. So within 30 days of the month in which the it exceeds 85,000 in the case of historic, and in the case of future test also, within 30 days of the day you realize that you're going to exceed the 30 days, 85,000. And registration effective in the case of historic turnover test, registration effective from first day of second month. Like if you feel like in the month of November it has exceeded, like historic turnover test you did in November 2020 it has exceeded, that means first day of second month means January 1st, first day of second month after November. Yeah. And in the case of future ties test, the first day, the very first year 30-day period, that is when it is effective. If you want to have a look, you can go to your handouts and do the questions with regards to the test, the historic and future ties test, future turnover. Yeah. Now we saw that this is with regards to compulsory VAT registration test. Some companies like to do voluntary registration. That is, they are not exceeding the limit, but still they want to do the registration. What are the advantages with regards to voluntary registration? These are the benefits and the disadvantages. Benefits are they can claim input VAT, and it is always good to say that we are a VAT registered business, which is the third benefit. And they'll also maintain accurate records. The disadvantages is even though you're not exceeding 85,000 and you're still registered for VAT, means you have to do, there is a lot of extra administration. And some cases it is not so effective if your customers are not VAT registered. Yeah. Then when it comes to group registration also, you can register yourself as a group. So if you want to take a look at the advantages, I would encourage you to go to the textbook and go through the advantages. Okay, so intra-group transactions are disregarded for VAT purposes. It is administratively much easier. Like if 5 companies make just one group VAT return, its administration is much easier. But each company, if there are 5 companies and only one VAT return is prepared, each company is responsible for to pay their own VAT liability. These are some advantages with regards to group registration. Now we also now when it comes to deregistration, let's take a look at deregistration. Now, some situations in which the company must deregister for VAT is if the business stops paying taxable supplies, or if they feel in the coming year, their taxable supplies is going to be 83,000 or less than that. Yeah, 83,000 or even less than that. Pound 83,000 or less than that. Yeah. So that is with regards to deregistration of VAT. Now, coming to this point, pre-registration input VAT. Now, we know we can only claim input VAT for the expenses we incurred when we are VAT registered, but in some cases, even the input VAT we incurred before we registered for VAT can be recovered. Now, in the case of goods and services, there are some conditions. Yeah, let's take a look at the condition, goods and services. What are the conditions with regards to goods and services? Now, both of them, goods or services, must be for business purpose. And when it comes to goods, the inventory, whatever goods we're dealing with, it must still be unused. Yeah, if there is inventory and 60% is unused, 60% is already used, like but only so we can only claim for the remaining 40%. And this particular expense must have incurred in the 4 years before registration in the case of goods. In the case of services, it must have been for the purpose of business, and it should be a 6-month. It should have happened the 6 months before the registration. These are some important rules with regards to pre-registration input VAT. Now, period of VAT and the electronic filing, this is also quite important, can come up as small MCQs. Let's take a look at that. Yeah. So, right. So, period of VAT. So, it's like we usually pay VAT in quarterly installments. Like, it's quarter, like March, June, September, December, just like your ACC exam. That's how your VAT returns. It's usually quarterly. And the electronic filing date is 1 month. Yeah. So 1 month and 7 days. So 1 month plus 7 days after the end of VAT period, after the end of VAT period. That is if it is for the quarter ended. So let's say quarter ended 31st March 2021. So when is the electronic filing date? Within 1 month and 7 days. That is within April, so May, within May 7th, before May 7th, it must be filed. The VAT for that particular quarter must be filed. Important dates. This is just, you can just go through this, read this. Then tax point, a very important point. Now, what is the whole point of tax point? I'll keep it simple. Now, certain transactions you actually delivered, let's say you are a businessman or you are the businessman, I'm your customer. You sold goods to me and you gave me invoice on a different day. I paid you half on a different day. I paid the other half on a different day. The question is, in which VAT return do we show this particular amount for this good? Yeah, because there are so many things happening. You gave me the goods, you gave me an invoice on a different date, I paid you in two different times. So when do I show the actual transaction, the VAT quarters? For this, we have tax point. So we need to first of all understand something called as the basic tax point, which will help us to find the answer. So what is the basic tax point? Basic tax point is a date in which the goods were delivered or the services were actually done. That is basic tax point. Now, after finding the basic tax point, the answer is either 1 or 2. That is, if the invoice date, the invoice is given, yeah, let's take the 2 points. Now, basic tax point, so what is basic tax point? Then the first, now any one of these cases only will be the answer. It's not like both of this will happen in one same question. If the invoice is issued or the payment is received before the basic tax point, then that is the answer. The date of the invoice or the date we got the payment. If it is before the basic tax point, then that is the answer. Now, if this hasn't happened and if the payment is received, or I mean the invoice is issued within 14 days after the basic tax point, then that is the answer. It can either be case one or case two, not both of them together.